Welcome to InvestmentWatch UK, the UK's favourite forex, crypto, signal and education provider. This module, we will look at the psychology of trading. This is, we believe, at InvestmentWatch UK, perhaps the most important aspect to trading. Investing and short-term trading in particular can be a roller coaster, both emotionally and financially. We will look at how important it is not to get caught up too much in this roller coaster. As you can see from the chart sample from last week, we have seen large movements in short spaces of time. Some movements have seen prices jump close to 50 pips in just under 1 hour. This is not too dissimilar to how the markets were this time last year, where it took a couple of months for the markets to settle down in the new year. Many professional traders and fund managers have found it tough. Even Neil Woodford, the UK's most successful fund manager over recent years, has found trading it tough of late. We mentioned the rollercoaster of trading earlier, and that it is important to not get caught up in this too much. When the trades are going well and your account is growing, it is important to not get too high at this point. Don't get high on the highs. Likewise, on the flip side, it is important if trades are going against you and your account is dwindling, then it is important to not get too low at this point, even if it is a prolonged period. Do not get low on the lows. You need to lower the emotional swings in trading, as both peaks are equally as dangerous: greed and fear. Greed can see you begin to take on more risk as you feel an air of invincibility or even inevitability that the next trade will be a profitable one. Fear can see you missing out on trades and not trading correctly, again through pessimism and inevitability that the next trade will be a loss maker. By keeping as neutral and level-headed will allow your account to slowly build and consistently grow over the long run. If you do find yourself at unease with the volume size that you are going to use per trade, and notice that you are continually checking your account with trepidation, apply some caution and lower your volume size. Remember, trading isn't about how much you have made or lost over the next 6 months. It is where your account is in years to come. Look at it this way. If you was to gain around 1% per week, this would compound to 68% over a year, and you won't get that return anywhere else. With the power of compounding over the long term, you will find, through consistent trading and keeping to the same level of risk on each trade, that your account value starts to grow and grow over time. Keeping your volume size at the same level throughout ensures a long-term growth on your account value. Fluctuating these levels through emotion leads to irresponsible trading, which is effectively gambling, something that needs to be avoided. As you can see from our performance graph, there have been downturns, yet the overall trend in the long term is an upward one. In summary, keep level-headed and avoid fear and greed. Trade consistently and keep the main thing the main thing. Trading is a long-term game which offers huge potential rewards, so focus on where your account will be in 3 to 5, even 10 years' time, and happy trading.